Okay, so the way the market works is that you find an approach that works for you. When you find that the approach works for you, you stay with it. Okay, so you'll be amazed at what 10 pips on the 10 pips consistently will do for you. 10 pips. If you are taking 10 pips and every day you can take 10 pips like 2, 3, 4, 5 times, you'll be shocked at what your account will become in 3 months, in 6 months. You know, so you'll be shocked. That's the way it is. But if you don't know how to do that, if you don't know how to approach the market, you might make money one day, lose the money the next day. Make money one day, lose the money the next day. That's not the way it should be. So it should be a question of you building up your account. You make money today, you add to it tomorrow. You make money today, you add to it tomorrow. Just like that. Okay. So, but when you have a systematic approach a systematic way of approaching the market, that's when you'll be able to make that happen for you. Okay. So let's look into some things. Okay, now look at this. We can see this chart, right? Can we see this chart? Just say hi, just lift your hand. If you can see the chart, just lift your hand. Let me see somebody's hand. All right, great. All right. So now when you look at this, now before we came here just now, we were here. Now this is called the US dollar currency index. The US dollar currency index is popularly referred to as the DXY. All right. The DXY is called the US dollar index. So now the US dollar index, what is it? The US dollar index measures like it's as it were the pulse of the US dollar. Sorry, let me know what someone is saying. Okay. So the US dollar index measures the pulse of the US dollar. So now when you see this US dollar index now, you will see that US dollar index has been falling, has been on a downward trend, Now, what is a downward trend? A downward trend is a series of a series of lower highs, a series of lower lows and higher lows. Higher lows and lower lows. That's a series. We will explain that. I will explain all of that to you guys. But you will see that this index, the dollar index, has been on a downward trend. But now look at this. Look at Euro USD. Can you see that Euro USD is painting the opposite picture? Can we see that Euro USD is painting the opposite picture that we just saw? Who can see that? Who can see that? Can we see that this one is going up? And then this one is coming down. Can we see that? Can we see that? Okay. All right. So now that is something that's very important in the market. Understanding the dollar index. When you see the dollar index is going up, the dollar index has a negative correlation with Euro USD. So Euro USD, for example, Euro USD if dollar index is strong, which means that the strength of the US dollar has strength. Right now, the US dollar is very weak. The US dollar is falling. So because the US dollar is falling, Euro USD is going to be rising. Like we are seeing right here. You can see the movement up. Okay. So now, this is a trade we've taken before. This is a trade we've taken before. And then look what we marked here. Look what we marked here. So we follow this market from the bottom. We follow this market from this bottom. We follow this market from this bottom all the way up here. Okay, so in order for you to understand what we are doing here, I will explain a little bit about market structure, a little bit. We will do a better training next time, but you understand a little bit about market structure. Let's do this, okay? So when this is the way price moves. Okay, this is the way price moves in an uptrend. In an uptrend, this is the way price moves. Then in a downtrend, this is the way price moves. This is the way price moves in a downtrend. This is the way price moves in an uptrend. So now the concept of market structure is this. When price moves from a lower point, and moves higher. Now, like I said earlier, in order to identify a trend, you need to see a series of higher highs. Look at, this is a high, this is a high, this is a high, this is a high. This is a low, this is a low, this is a low. This is a high, this is a low. This is a high, this is a low. Just look at it like this. Look at every trade you take. Every trade, just look at it like this. If you can't hear me, just unmute yourself and tell me so that I will know. If you can't hear me, unmute yourself and tell me. Then you mute yourself back. Okay, look at this. Look at this. So now the top ones, when you are, the top is always the high. The top here is always the high. Okay, this is the high. This is the low. This is the high. This is the high. This is the low. This is the high. This is a low. This is a high. This is a low. So now, when you are in an uptrend, you will see that the lows are increasing. They are going up. So we say you have a series of higher lows. This is a low. Just look at a price as though it's in a channel. This is what we call a channel. This like this now is called a channel. Like this is called a channel. So the top of the channel is the high. While below the channel is the low. This is the high. This is the low. This is the high. This is the low. This is a high. This is a low. Okay, so this is a high, this is a low, this is a high, this is a low, this is a high, this is a low. This is a high, this is a low, this is a high, a low, a high, a low. All right? So in an uptrend, you have a series of higher highs. This is a high, then you have a higher high. Then you have another higher high. Okay? So let's do this. So you have a higher high. Then you have a higher high. So you have a low, but here you have a higher low. Then here you have what? A higher low. It's just a simple concept. the low, this low is higher than this low. This low is higher than this low. That's what it is. This is a high. This high is higher than this high. This high is higher than this high. So an uptrend is a series of higher highs and higher lows. An uptrend is a series of higher highs and higher lows. Okay, so now a downtrend, this is a lower low, and then this is a lower low. This is a lower high. Okay, so this is a low for this is a downtrend now. This is an uptrend. This is a downtrend. So this is an uptrend. This is a downtrend. Okay, so I'm sure we got that now. An uptrend is a series of higher highs. Why and higher highs and higher lows? Why a downtrend is a series of lower highs and lower lows. Lower high, this low is higher than this low, is lower than this low, this high, sorry. This high, this low, this high is lower than this high. This low is lower than this low, and this low is lower than this low. Do we get it? If we get it, put a yes in the chat box, please. If we're understanding, put a yes in the chat box. If we are understanding, put a yes in the chat box. Okay. Yes. Okay, great. Great. Okay, fine. Okay, so that's where you start from when you want to understand market structure. All right? That's where you start from to understand market structure. Okay, so now when you're on an uptrend and you see higher highs and higher lows like this, what you understand now is this. If you are in an uptrend, you need to know whether your uptrend is going to keep going, or your uptrend is about to turn to a downtrend. Now, if your uptrend is going to keep going up and you want to buy, there are people who like to buy in a downtrend. Now, if you see an uptrend, you buy in an uptrend. You buy in an uptrend, you sell in a downtrend. You buy in an uptrend, you sell in a downtrend. You buy in an uptrend, you sell in a downtrend. So as long as you see an uptrend and you can see that the price is still going up, we are still in an uptrend, you continue to look for opportunities to buy, not sell. Because if you sell and the thing moves properly, you will be in a serious drawdown. All right? So you don't, when you see an uptrend like this, you are not looking to be selling. You are using opportunity, you are looking for opportunity to enter again. Because the way price moves, price doesn't move in a straight line. Price moves up, down, up, down, up, down like this. And when it's moving like this, it's forming all these series of higher highs like that, higher highs, higher lows, and all that. Therefore, a downtrend, it will be forming a series of lower lows, lower highs, lower lows like that. All right. So when you're in a downtrend, all you are looking for is opportunity to sell. When you're in an uptrend, what you're looking for is an opportunity to buy. All right. So that's something you put in your mind. Keep that in your mind first. Keep that in your mind first. Hello? Someone say something? Please, if you're not saying something, mute yourself. Thank you. Okay, so now what happens is this. When you're in an uptrend and price moves, Take note now. Follow me, guys. Follow me now. When you're in an uptrend and price moves from this point, we've established that this is an uptrend. This is the way an uptrend is. And this is the way a downtrend looks. This is the way an uptrend looks. This is the way a downtrend looks. All right? So now, if you are in an uptrend, what you're looking for is opportunities to buy. So what you do now is this. When price moves from this point to this point, moves from a low to a high, price will necessarily pull back. Price will necessarily pull back. Even though it's going up, it doesn't go up in a straight line. It doesn't go up in a straight line. Price is like normal life. You may be traveling. You don't know, you might get somewhere and the rain is falling or something, or the road is bad, but you're still going to go where you are going. You are still going to go where you're going, right? So that's it. You might get to the airport. You might get to the airport and something, and then there's delay in your flight because of weather or something, but you're still traveling. You're still going where you're going. Okay, you're still going where you're going. You're still going where you're going, right? Okay, so, but this is the way it is. When price moves from a low to a higher point, it pulls back. When it pulls back, then it moves to another high. Watch this now. This high is higher than this high. When that happens, this becomes a structure. This point of pullback becomes a structure. This point of pullback becomes a structure. All right? So take note of this, very important. So when price moves from a low to a high, from a low point to a high point and pulls back, this point of pullback here becomes the market, becomes the structure. All right? So that is the structure you're working with right now. Guys, until this structure is broken, like this, you are always going to be in an uptrend. You are always going to be in an uptrend. You are looking to always buy. It is when this structure is broken, then you start looking for a sell. You know that the trend has changed. Please mute yourself if you're not talking to me. Then you know that the trend has changed if this structure is broken. If this structure is not broken, guys, you are still in an uptrend. And you will always be in an uptrend as long as the structure is not broken. Okay, now come with me. Now, then price moves again. Remember, it moved from this low point to this high. Then it pulled back and then moved to a high. Then gave us a structure. If it doesn't create another high, it will not give us a structure. If it doesn't create another high, it will not give us a structure. We will not take it as a structure. It's not a structure. It is just a support or a resistance. So I'm sure some of you have heard about support, resistance, and all that. So when you understand structure, that's when you will know how to use support and resistance properly. You will know how to use support and resistance properly in an uptrend and in a downtrend. So you won't just throw lines into the market and say, okay, I would buy and sell whenever I see a line. No, that's not what you do. So what you do now is you will see this structure is created. So it moves to another high. Once it moves to another high, then this structure is created. Now look at this. Price moves again from that high, then pulls back again. It moves from this point, pulls back again, and then it moves to another high. So when it gets to this, when you see another high created, the structure will now move to this point, the point of the next pullback. Okay, so it's called a recent low. A recent low. This is the most recent low. Now, when price was here, this was the recent low. When price has pulled back now, gone to this point. This is now the recent low. Now, we'll go through all this. I'm recording it. You can watch it over again. I'll post it where you can watch it over again. But then don't worry about this. Even if you don't get it very much right now, I will do a another training on this properly. But what I'm just doing now is just introduction. I'm just introducing you to it. Then I will go into the market and look at pairs. So, but I want you to understand what we are doing. I want you to understand when I start telling you this is structure, it moved up like this, and I want you to understand what I'm saying. That's why I'm introducing you to this at this time. Okay? So now, when price moves up to like this, it gives us a structure. Now, like I said, if price does not move to a new high, it will not give a structure. There will be no the recent low will remain the one under. The recent low will remain the one under. Okay, so the same thing here. Now, when price pulls back from here and moves from here now, then pulls back, we know price is always going. When you're in an uptrend, price is going to be moving up and pulling back, up and pull back, up and pull back, up and pull. That's what you are going to be seeing in an uptrend until the recent low is broken. When the recent low is broken, when price breaks below the recent low, that is when you see a trend change. Then you know that, okay, a downtrend is about to begin. All right? So that's the way it is. Now, in this case, you see that price moved up from here again, from this recent low, up here, and then it came back. It pulled back again, and then it moved to another high. So now that it moved to another high, this becomes the new structure. This becomes the new structure. This becomes the new structure. All right. So this is the way it will be. Then when price now moves like this and breaks like this and breaks like this, that's when you see that, sorry. That's when you see that the trend has changed. The trend has changed when price has broken the recent low. All right. So this is how you're. This is how to see. This is what you do in an uptrend. This is how you identify. This is how you know. This is how you follow an uptrend, and this is how you know an up.
Did they take your lights or what? Did they take your lights? NEPA as usual. What's happening now? Hey, are you not still there? What's going on? It's like they took his light, oh guys. Maybe you should exercise patience. Feel like say they take your light. NEPA as usual. I trust.
For my app, I'm not hear anything for like almost 15 minutes.
Can you hear me now? Can you hear me now?
Yes, I can hear you, but I've been lost.
Oh, I didn't know that. I didn't know that. I didn't know that.
Hearing.
Oh boy.
Yes, I was not hearing you for a long while.
Yeah, I didn't know that. I didn't know that.
I was lost out completely.
Did you follow this? Did you follow what I was saying here?
I don't.
Just unmute yourself. You can answer. Did you follow what I was saying here?
Yes, I was. Yes.
Okay.
The first downward trend. That was where I stopped.
Okay.
The first blue line started.
Okay.
The
Okay.
third line.
Okay. Okay. I was talking about this. So what I was saying was I was talking about the higher highs and higher lows.
The upward.
Yes. So the higher highs and higher lows. What I was saying then is I said whenever the only point you know that a trend has changed is when a structure is broken, when a recent low is broken for an uptrend. When a recent low is broken, that's when you know that trend has changed. Okay. So now let's look into the market and see what we've marked before and the results how the trades are played out. And then let's see if we can pick opportunities tonight. But tonight, look at this. Look at this, guys. There is what's called FOMC. 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 Can you see my chart? Can you see my screen? Can you see my screen? Please answer if you can.
Yes, we can.
Can you see my screen?
Yes, we can see it.
Okay. Okay, so FOMC, look at FOMC 8 p.m. Now this just happened. So this FOMC is a very powerful news from the US. Okay, it's like the rate.
Screen is off. It's
Sorry?
off. Yeah.
Sorry, are you talking to me? Okay, so this is what happened just now. This is why you're seeing a lot of craziness in the market. That's why you're seeing all this movement right now. A lot of noise in the market because of FOMC. FOMC is one of the strongest news events. It comes out once every month. Once every month, okay? It comes out once every month, okay? So that's why you're seeing all that in the market. All right, so now, here's what happened. We did a structure markup of all this. Let me look for a trade so we can look at structure properly. Now follow me. Let's do this. This is a downtrend. Let me show you why it's a downtrend. Okay, so look at this. So you see this come down like this. This is how we get structure. Watch me now.
If I may come in, please.
Yes, go on.
This process that you are following is
Yes.
a little bit more complicated because
Yes.
I am
You know
not
why- you know
seeing.
what-
I
you
am
know
not.
what-
I am not seeing. Wait, I'm not seeing the structure that you drew now.
Yes, that's
With
what I'm
showing live now.
that's what I want to show you now on my screen now. I just started showing the structure.
I mean, how did she leave the baby alone?
I just started showing the structure right now. Okay. Now, when you are drawing the structure, now look at this. This structure, I know that you don't understand it properly, but I want to use it like I told you before I started. I said, what we are going to be doing here, you are going to get trade signals from it. But the difference between this and if you've ever followed a signal before, you will know that someone will just send you a signal and tell you buy or sell. You don't know what the person is looking at. Okay, but the reason why you see this is what I'm doing is I want to show you when we pick a trade, you will know why we pick that trade. You will know why the trade makes sense, and you know why the trade is going to win most of the time. So you may not understand all this properly yet, but we will do it. Then I will show you where the structure is and what we are expecting to see in the market. And if you are on, let's say you're on a demo account, you can pick the trade on the demo account to test it out. Do we understand that? Do we understand?
Yes.
Yes. Yes.
Okay.
Continue.
Okay.
Continue. Yes.
Okay, great. So now,
Yeah.
when you are drawing structure, you can pick your structure from anywhere. It's just what's important is it helps you to get to where you are going. Where we are going now is we want to know what to do with this. We can see a downtrend already. We can see that price is moving down. We want to know what to do with this. What do we do with this movement down now? What do we do with it? And what opportunities does it give us in order to enter the market to trade? That's what we're looking at. That's what we want to look at. Okay, so even if you don't get all the structured things yet, just follow me. Okay, of course, you are not going to get it all today.
But what I'm saying is, it is not a zigzag movement that we are seeing here.
Sorry?
This is different from a zigzag movement.
Well,
That's what I'm saying.
Yeah. What do you mean the zigzag movement? This is a zigzag movement. This is a zigzag movement.
Hi.
Is it not a
It's
zigzag
actually a
movement?
zigzag movement, moving
No.
up and down, gradually
No.
going downwards.
No, the mark is going downwards, right? Can you see it's going downwards?
If you look up, you will see that initially it was going up and then it now started
Okay,
going down.
you just hold on. You see what I'm saying?
Okay, so probably
Yeah,
it was coming from,
it's
from
like
an
that because it
uptrend.
turned. It
Okay.
changed its movement and started going downwards.
Yes.
Initially,
Yes,
it was
yes. Yes, I see
Look,
now.
Rosa, do you think I enjoy knocking on my siblings' doors, collecting money every month? Do I look like a landlady?
Okay.
As our eldest
So
sister,
now,
you should be
this
taking
is
care of the
I
bills.
see.
this is what we are doing. What we are doing is we are just following the roadmap of price. We are just following the roadmap. Let price follow. That's what we are doing here. We're just following the roadmap. So price moved from this point, then it got here, it pulled back here, then came here. Remember, I said that if you are in a downtrend, until you see a lower low, which means that this point, this price moves from this up here to this point, and then pulled back. If it did not come down and break this point, which is from a lower low, there is no structure yet. So now you see that it came here, it pulled back, it came here, it didn't go below. So there is no structure. It kept going on like that, until what happened? It dropped like this. So when it dropped like this gave us now a structure right here. That's the structure we have there right now. Okay. So that's a structure we have there right now. So now price moved from this point all the way here. Then when it moved here, what happened? It pulled back here and then moved to a low, Once it moved to a low, this gave us another structure. This gave us another structure right here. Another structure was formed right here. That's another structure that was formed right there. So now, why was this structure formed? Because this low now, look at this low, is lower than this. Why structure was formed here was because this low is lower than this point. All right, so now this came down and then pulled back a little. When it pulled back like this and came down low, we found another low right here. We found another structure right here. And the way price works is this. The way it works is this. Whenever price breaks a point, whenever price comes down to a point, it will do what is called a retest. A retest. So you see all these points now where we have all this structure. Price is going to come back here. It's going to come back here. It has not come here. It has not come here yet. But you can see it has come here. When it came to this low, this was an opportunity for a sell now. When you see this point now, you see this structure was formed here. A structure was formed here. This was now the time for an opportunity for a sell. You could have entered the trade here. Someone could have entered the trade here. Because you can see the structure, you know it's going to come down. Or someone could have entered the trade here again, waiting for these same points to be, you want price to come to that same point again. So if you had entered the trade here, you would have moved, you would have done this, you would have made money on this one down. That's how much? That's about 29 pips or about 30 pips. So you take that trade again from here, that's another about 30 pips. Okay, so now, guys, when you are trading this plan or this setup that we're going to be doing, when you are trading it, your goal is not to take a huge amount of pips. In a day, your goal should be to take between 30 and 50 pips. So if you have a $100 account, you can use 0.01. Use 0.01, and when you use 0.01, that will give you, if you have 30 pips, that's $3. If you have 50 pips, that's $5. That's 3% or 5% on your account in a day. When you grow that money in 3 months to 6 months, you see how it multiplies. So that's the way Forex is. Forex is not you want to hammer immediately, but eventually it's still going to be like hammer, because if you grow $100 to 10,000 in 3 months or 4 months or something, it's still the profits you'll not be making. Your 5% on 10,000 is $500 a day. Okay, if you have a 5K, if you have grown your account to $5,000, your profit, your 5% on $5,000 is $250 a day. Okay, so that's the way to look at it. Some people say, oh, you're thinking, okay, you have to bring big money to trade. Yes, you can bring a lot of money to trade if you want to, if you're looking at the profit immediately. But if you don't have the big money to trade, then you invest in the education so that you can trade, build your account, trade and build your account, trade and build your account. Okay, you trade and build your account. So this is how it is. Now, this market right now, as long as what we are seeing now, now from here, we are seeing a low. We are seeing a low from here. But this has not, we have not seen a correct pullback. When we see a correct pullback now, we will have another structure. When we see a correct pullback now, we will have another structure. But if we don't see that, this is what's likely to happen. When you see that price moves from here now and breaks this point, and then comes back like this, and then moves up, then you know that an uptrend has begun, has started, because this structure has been broken. Okay, so let's look at something. Let's look at one trade I did earlier. I think was it earlier this week or later part of last week. So let's look at this. So we did this markup like this and marked up the structure. At the time, the structure was here. So when this break happened, look at this red candle. When this break happened, it retested it. That's why I put this line here. I said, okay, if it doesn't come down, it will go up. Now, when you look at the market, you can't look at the market only from one perspective and say, okay, it's going up, it's going to keep going up. You are looking for structure. You are looking at how structure is playing out so that you can know when it's changing direction. When you don't know that it's changing direction, you will not know how to position yourself. So here now, when I saw this break, this long candle here, it broke this structure. It broke this structure because look at this, guys. This is an uptrend. Can you see this? It's an uptrend. It's been going up and up and up and up and up all the way from here. Now, from here, when we saw this break of structure, we saw this structure, we identified this structure. Once we saw this break of structure, we knew that price was going to come down from here. We knew that price was going to come down from here. And then it dropped all the way 200 pips. It dropped 200 pips. Okay, so this is what the structure is. All right. So now let's look at this. This is Euro JPY. Let's look at what is happening in Euro JPY now and see if we will get an opportunity to trade tomorrow or tonight. All right. So look at this. We took this. So I know this is getting okay. It's not even that long. We started at 7:30. Okay. So now look at this. Let's draw our structure so that we can pick a tree. We won't have time to do much, but we'll just do one or two before we round up. All right. So now look at this.
Can I ask a question?
Yes,
can I ask
go on.
a question?
Yes, go on.
Yes, I'm sorry for interrupting. The thing is,
Yeah.
you know, there are many time frames.
Yes.
And the different time frame shows different things.
Yes.
And that is part of what confuses somebody when somebody wants to trade.
Okay.
So which time frame is best for
Okay.
showing a proper structure
Yes.
that is going to be breaking out or that is going to be reversing?
Okay. This is what I do. This is what I do. I use 1 hour and 15 minutes. I use 1 hour, I use 15 minutes. Both of them are valid. Sometimes 1 hour will give you the quickest, the closest structure. Sometimes 15 minutes will give you the closest structure. So just pick one. And for example, there was one I marked out this morning, Euro GBP. I don't know how it got cancelled. It's actually the picture I have on that Facebook group. All right, so I marked it out on 15 minutes. I checked on 1 hour too. In fact, I didn't check on 1 hour. I did 15 minutes. But eventually it played out the way I wanted it. But when I got to 1 hour, I discovered I would have gotten a better entry if I had done it on 1 hour. So 1 hour and 15 minutes, those are the two time frames you use. Any one of them is good. Right? So this for example now is 1 hour. This is 1 hour right now. Okay, so let's do it and then look at 15 minutes as well. Okay, so let's get the structure of this one. So we see this pull back, then we see that this came all the way down. So when it came all the way down, we know that we have structure here. We know that that's where we have structure. All right, so this is what is going to happen now. As long as this structure is not broken, everything here does not mean anything. Everything here right now means nothing. Okay, so you are not even going to be trading here. You're not trading here like that. Everything here right now, you don't really have to bother yourself about it. So what you are going to do, what we are going to do is this. What we are going to do is this. Hold on. The next opportunity to trade on this pair now, this is where it is. This is where the next opportunity to trade here is going to be now. So price is going to either move here, come to this point, which is structure, and then drop back. And then drop back. So in this case, what we are looking to do is we are going to have another session tomorrow morning so that we will know when we are going to enter. All right. So what we are doing here is for education and for trading. So it's not just hype. It's not just theoretical. We are doing the theoretical, then we are using it to actually place trades. All right. So now, what we are going to do now, we are going to be looking for a trade around here. We are going to be looking for a trade somewhere on this blue streak, on this structure. This is the structure. On this structure, this is where we are going to be looking to trade for a sell. But then in the market, you may not know what's going to happen. So, but in that case, we are also going to consider what will happen, what could happen, which means that we could see a break like this. Which means that we could see price break above like this, retest the zone, retest that structure, which means it came back, it pulled back to that structure, then it will now buy. It will buy all the way to this place. So these are the two scenarios we are expecting right now. These are the two scenarios we are expecting for Euro JPY right now. These two scenarios what we are expecting for Euro JPY right now. So let's look at this. So this point, what we are looking at here now is look at this point, 122.54. This is the price we are looking at now. So first of all, we are going to see what happens at this point. So we are looking to both either buy or sell. But what I personally, as long as this structure is not broken, we are still in a downtrend. As long as this structure is not broken, we are still in a downtrend. So I personally would expect to take a sell here. But in the case that it gets broken, this structure gets broken, all you need to do is wait for a retest and buy. You buy with confidence. You buy, if this structure is broken, you buy with confidence. You know that you are going to get, you know that from here, you are going to get even up to 80 pips. But guys, what I said before is this: your target is 30 to 50 pips a day. Once you get your 30 to 50 pips, you are done for the day. You move away from the market. You go and do other things till tomorrow. Do we get it? Do we get it?
Yeah.
Okay.
I get it.
Okay. So that is what this is going to look like. So what we are going to be doing is that if you have any experience with any trade you've taken or you are looking at or something, all you just need to do is throw it, bring it like this. We will analyze it. We'll analyze it like this, and then we'll know what the opportunity for trading to trade that particular asset is. All right. So now, if we look at Euro USD, look at Euro USD right now, we will see that there is no clear movement on Euro USD yet. This was where we would have bought. This was where we would have been buying, because look at this structure was broken. Look at this structure was broken. We marked out this point before. This structure was broken, and then we saw this movement from here all the way here. You can see it moved up very much. That was the structure. So someone could have entered, you could have entered. I just marked up this. I didn't even trade this today. So you could have entered your trade here, or you could have entered your trade here. And then you would have gotten at least 30 pips from this trade. All right. So now, right now, we are not seeing any opportunities yet for now. No opportunities at this time for now. So, but we will look into this again tomorrow morning to see if we'll have an opportunity to trade it. All right. Okay, so let's look at one more so we can call it a day. All right, so this is GBP USD. Let's see what we're expecting to see here. So we see a trend. GBP USD was going up like this, and then it pulled back. Oh, sorry. It pulled back, and then it moved what? It moved to a high. Once it moved to a high, this became our structure. It moved to a high, it became our structure. So now, but what happened there? It moved from here again to this point. And then it moved to another high. So once that happened, this gave us another structure around here. This was now our structure instead of this. All right. So what we need to do is we will need to be buying. Since this structure was broken, since this point was broken, this is going to be a buy for us. This is where we would have, this is where we entered a buy this morning. This is where we entered a buy this morning. You can see this was over 50 pips. But what you are looking for is just 30 pips. Okay. So now at this point, we are not seeing any structure yet. Nothing else is happening in GBP USD right now. Maybe by tomorrow morning we'll have something. But the news that just came out now is why you are seeing all these long movements, all these long weeks right now, because of the news, FOMC, that just got released. So FOMC is really disrupting the market right now. You won't see a lot of structure right now until after several hours, because FOMC is a very strong news, right? So we're not going to see a lot of structure right now because of FOMC, all right? So that is, that's it. So guys, do you have any questions? If you have a question, please just throw me the question. So let's just throw me a question so that we'll go through the questions, and so we can call it a day for today. So ask me a question. You can unmute yourself. Unmute yourself and ask questions.
This indicator you are using to analyze. So what's the name? Because you said you can analyze.
Can you talk louder?
Is he using a live account?
Yes, let me tell you what this is. This is an online chatting platform called TradingView. Look at it here, TradingView. So TradingView is a free chatting platform that anybody can use. So what you need to do now is go to TradingView and get an account. It's a free account. All right. So now TradingView is not where you trade. TradingView is not your broker. TradingView is where you analyze the market clearly. If you are on your broker right now, you will not be able to analyze as we are doing all this analysis we are doing now. You won't be able to do it properly on your brokerage platform on MT4. It doesn't have a lot of tools like this. So that's why we use TradingView. TradingView is better for analysis. Then after you analyze on TradingView, you can go and place your trade on your phone. MT4 that is on your phone or MT4 that is on your laptop. You can then place your trade on MT4. Do you understand me?
Okay.
You understand, right? Hello?
Sorry.
You get me, right? Do you understand, or do you want me to say it again? So if you want to ask a question, just unmute yourself and ask.
Make enough money to pay the electricity bill?
One more thing.
Okay, so do we understand what we are doing? We understand what we've said so far today?
Hello.
Yes.
Hello, Eddie.
Yes,
Are
I'm
you there?
listening. I'm listening. You've not said anything.
We can't hear you, please.
You can't hear me?
Not you, is.
Okay.
I don't really care about that.
Hello.
I'm doing everything I can
Reply.
for us because I know where this is going, Marathon.
The podcast today, Jennifer told me about this coach from a soccer club that's having I get to decide what to do with my life. Besides, soccer is not about
Hello.
Yeah, hello, I can hear you.
Is it possible to raise my hand?
You're not going to the tryouts.
Okay,
So forget about
don't worry.
stupid soccer right
If you can't raise your hand, just talk. Just talk. I can hear you.
Hello.
I can hear you.
Now you tell me. You're the one who taught me how to kick a ball. Now you're.
So is, I have another question, please.
Please, the person's audio that is the person, someone's TV needs to be muted.
Yes. No.
If you try to follow that dream, you're never going to finish high school. And
Can you hear me?
Hello, can you hear me?
Yeah, I can hear you. I can hear you. Just go on.
Now, good. Now, all this, how can I call it? Could I call it indicator you are using to draw? Can you please kindly explain as you just go through it? How can we pick it? How can we use to draw and all that?
Okay. So what?
I think I can get to be one of the greatest.
Okay. So this like I said, all when you this is trading view, right? I'm sure you are used to Are you used to MT4 already? You have an MT4 on your phone or your?
Yeah, I know trading view. I know yeah.
Okay, you know trading view already.
You really regret it? You were fighting for your dreams.
So this is trading view. So these indicators I'm using here are
But
just
I don't know how to use trading view to analyze the way you are
okay,
doing it. That's why I'm
fine.
asking all the questions.
Yes, the truth is using trading view to analyze is actually better than using MT4 to analyze, right? Because of the tools. Look at where my cursor is. You see all these tools. You see all of these.
Yeah.
All of these.
It wasn't easy process.
They are all tools available on trading view for you to use to mark up whatever you want to mark up. Look at them, everything. This blue strip I'm using now is from here. Is this rectangle. Is this rectangle that I'm using. This is an eclipse. If you pick this now and you do this, it will spread out. So all of this I can use this now. I can put this somewhere. So all of this, you can use these tools. You use these tools for
good.
Right? So that's what it is. So you use TradingView to analyze, and you go and take your trade on your phone or on your laptop.
Yeah.
You get?
Okay. Thank you very much.
Hello.
Yes.
Can you hear me?
I can hear you.
Yes, I want to ask. You were mentioning 30 pips,
Yes.
50 pips.
Yes.
How do you calculate that? How do you calculate that?
Now, if you're on TradingView, all you just need to do, you see this thing that looks like a ruler. It says measure.
Okay.
Can you see that?
Yes.
All you just need to do is click on that. Let's say you're taking your trade here for a buy. You just click here and you drag it up. As you drag it up, can you see where it says 50.8? Can you see 50.8?
Okay, yes, I can see.
That is 50. That's 50 pips.
I see.
So that's how you do it on TradingView. But for you to do it on MT4, you will need to manually calculate it. We don't have time for that today. I would have shown you how to do that. All right. So I'll show you how to do that. If you need to learn to do that, I'll show you how to do that. We don't have much time today to learn to do that. All right. So that's on MT4. Yeah.
Can you make use of your phone for the TradingView?
Yes, you can. You can. Just
all these things.
Yes, everything is there. Everything is on TradingView for your phone. You can get the app. You can get the app, or you can have it on your browser. So, but what you do is you create an account. When you create an account for yourself on TradingView, you can see me now. It says I'm logged in as my name. So when you create an account, it's a free account. You don't have to pay. Though there's a paid plan, but you don't need the paid plan. You create an account and you log in. When you log in, once you're on your phone, it will be logged in too. on your phone. All right, it should be logged into on your phone, so you can do anything. Whatever I'm doing right here, right now, on my phone, I don't need to do this again. These things will already appear on my phone, on the trading view on my phone. So I already know, if I know that I want to take a trade and I've done this on my computer and I'm on the road, I can still take a trade with my phone. I don't need to be, I'm not need to be on my computer. Once I've done this on my computer, I go away from my computer. Do you understand that?
Okay, I understand. On the paid plan, do I need to do the analysis, or they will have done the analysis? They will just
no. The analysis is what we are doing now. The analysis is what we are doing now. So when we do analysis, right now,
said,
yeah.
You said on the paid plan. You said there is a paid
no,
plan.
On the paid plan, they give you more features. They give you more features. They are not doing analysis for you. They just give you more features. Okay. So you can set alerts. You can do a lot more things. You have access to more indicators if you need it. Okay. And that's what the paid plan is for. The paid plan is not for them to analyze for you. They are not doing the analysis. It's always you that will do the analysis yourself.
All right.
Yes. So are we okay? All right, guys. So this class we are having, like I said before we started, the purpose is for you to both get signals for trading and to learn to trade at the same time. This is just the start, right? We just began this. And what I plan to do is to have a structured training for everybody here. So you have a structured training so that you know how to do, even though you are coming on the sessions to learn and pick trades, you'll be able to also do it for yourself, because we've been here now for about an hour. Okay, there's a limit to how much time we can do this, right? Together. But if you know how to do it, you'll be able to do it yourself, and you'll be able to pick your trades by yourself all the time, right? So that's what we have. The purpose is twofold: to learn and to earn, right? So that's what we are doing, and this is the first time. This is just the first training we're having. So we'll continue. We'll do another training. We'll be here again tomorrow. Then we'll look for trades to take. If you have a demo account, you want to pick the trades on demo first, it's fine. If you have a live account and you want to use a small lot size, it's fine as well. Okay. So there's no more question. Then we'll see tomorrow.
Thank you very much.
All right. Good night, guys.
Okay, good night. Thank you.
Thank you very much.